Hello, everyone, and welcome to yet another session, another day of the basic and fundamental Forex trading, just to help newbies or struggling traders. And of course, this is Fortune Signature right here. It's all about building a fortune trading Forex. I'll do that with the help of making you, more of an independent, trader. It's a help of independent and consistently profitable traders. And of course, our, should I say, pride has to be, of course, proven signature trades that steadily guarantees of fortune. All right, very quickly, we have quite a lot of things to cover today. We've actually gone really, really far. The last time we had a class, it was all about looking at the types of charts. That's what we actually started on. Yes, types of charts. We looked at. We looked at. Okay, this is actually jumping farther than I actually, thought it would. We looked at types of charts. We looked at. I have a lot of things to cover. I can see. Right, we looked at types of charts. We looked at our MT4 setup. We looked at. I think I need to get this sorted out, before we can look at types of charts. And then we looked at the bars, the lines, the candles, we looked at candle charts. We were very much in detail, open the Forex trading account, how to set up your MT4, and getting familiar with the trading environment. Desktop, we're going to look at the mobile today, looked at various time frames. We haven't looked at some indicators, we haven't looked at some tools. I think we treated some, one or two such tools, but of course we looked at them in detail today. Okay, and the MT4 environment, how to set it up, we looked at that, and we looked at, placing an order. Okay, basically, I would want to pick it up from placing an order and coming back to this. So placing an order, we have this instant execution, which is what we did, and we did try out how to place an instant execution on our desktop. We'd also look at pending orders, because when you're placing an order to buy or sell, it's either you're doing that immediately and asking the market, why waste time? Just make it happen like instantly. All right. But of course, there's some people that tend to place pending orders because they speculate that the market will go in a certain direction. However, they want to be very sure or double sure that price has to break some limits or reach some positions or points before they want to get into such trades. And that's why they set up pending orders. All right. We also looked at modified order, which is basically all about adjusting your buying or your selling orders, right? Of course, you want to adjust, your lot size. You want to readjust your stop losses and your take profit. No, you can't actually adjust your take profit. But no, you can actually adjust your take profit. So you can adjust your take profit and your stop losses, and that's how you modify your order. All right, I want to make it different. I want to set a new TP as a new stop loss. That's what I do to modify my order. All right, so pending orders, as it were, pending orders, sell limits, buy limits, stop loss, sell stop, and buy stop. What do they mean? Sell limits. For a sell limit, what you're trying to do is that, you're placing, your price. You're placing a supposed point of entry, a new order, above where price is. Okay? You're placing it above where price is because you feel as if that price has gone too far and like you missed out on the trade. So you're hoping that the price will come back up to a certain level that will give you a good entry, to take advantage of the movement. Okay? Let's show you what I mean by that. Okay, so let's share the screen again. That will help us know. So we're talking about buy sell limits. Okay, particularly we're looking at sell limits. Okay, that's what we're looking at. Yes, sell limits. All right, so for a sell limit, we all remember this trade, right? We were just playing around placing this trade. Okay, so for example, market, please follow my cursor like I said earlier. Market had moved up until this point. You were hoping that at this point right here, you were going to sell. Okay, Say you missed out on the opportunity and market had traveled all the way to this point. I'm like, wow. And I really know that this market is still going to sell further. Okay, so what do? I would say, let's wait for this particular market to come all the way back to say this position here. Okay, so I place a price here, a pending order at this point of 0.70405, right here. That when price decides to move from here back up here, pick me up right here with the anticipation that price will now go further down. Do we get that? And that's a sell limit. That's a sell limit. Okay, price was up here. I wanted to sell, but I'd missed out on a very huge movement, and I'm anticipating that price will return back up, you know, to give me a better, it might not be as good as the same point, but at least a good entry where I can make some maximum, you know, point. And so I just say, you know what, pick me up somewhere here or even here. All right, since it has gone all the way down here, and I said, okay, pick me up somewhere here, which was a good point. And then when price gets to this point, because it's an order, it's automated. So the moment price gets to the point where you had set, it will just what? Sell it. All right, like OLX, it will just sell it, and it sells further down. All right, so that's what a sell limit is. What is a buy limit? What is a buy limit? The same thing applies, and it's like the opposite for buy limits. Okay, for buy limits, price is somewhere down here, all right, and it had traveled all the way up here. Oh boy, I want to still get into this market. So what do? I set a buy limit somewhere around where this price came to here, all right, and I'm hoping that when price comes back down a little bit, okay, the price will pick me up, all right, and then travel the direction of what I still anticipate, which is still to buy. All right, so buy limit is what? Setting the price below where price is at the moment. Setting the price below where price is at the moment, in anticipation that it will come back to pick me up and then go in the direction I want it to go. Why sell limit is putting price above where price is at the moment, with anticipation that price will return back up to pick me up for a proper entry to sell downwards. Do we get the picture? Just that simple. So what is a sell stop and a buy stop? These are the possible pending orders that we have. Remember, when we actually want to place a new trade, you know, we go to new order here, and we have buy stop, sell stop. So, and these are the pending orders. Okay, buy limit, sell limit is what we just talked about. Sell limit, buy limit. All right, we just looked at that. So what is a buy stop and a sell stop? A buy stop is that price is placed above where price is at the moment. Okay, I want to buy market. So let me adjust this. Let me close this for a buy stop. Okay, so that we understand this very well. I want to buy markets, right? I want to buy this particular market for a buy stop. All right, I'm not sure this thing is really going to buy yet. I need more and more confirmation. So I would say when price breaks this particular point here, okay, please get me into the market, because remember it's an automated order. So price got here, came back down, okay, came back up here, and it picks me up. The moment price picks me up, even though it came back down a little bit, it then decides to what? Buy, because remember, price does not go in a straight line. Price does a zigzag, a regular zigzag. Okay, so and then it goes all the way up. That's a buy stop. Buy stop is pick me up in front, because I can now confirm that price will go. And people said pending orders because maybe there's a possibility they are not there, you know, when that happens. So they're like, okay, I understand that price will travel this far today, but in order to be sure that it will really move that, you know, far, when price gets to this point above where price is right now, then take me further up. All right, and that's what buy stop is. Sell stop applies the same. So you are saying that I am here, I have sold the market at this point, beautiful. All right, I'm not sure that this market will still sell very well. So I say, when price gets to this point, please pick me up and keep selling further down. So for sell stop and buy stop, for buy stop, price is placed where? Above the buy, in anticipation that it will pick me up and further buy. Sell stop is price is lower than where it is, okay, in anticipation that it picks me up and further sells. All right, the limit is that price, for sell limit, price is where? Price is placed, you will place an order above where price is. All right, you need to study this well enough so you don't get confused. You need to place an order above where price is, like here, in anticipation that when price comes to that point, retraces a little bit, it gives me an opportunity to get into the market, and then I sell. And for a buy limit is the same. It means that I want to buy here. I am placing price where? Below where price is at the moment. Let's say price is already playing out somewhere here. I will now place the buy limit somewhere here, so that when price comes back down, it picks me up at a reasonable entry, maybe not as good as where I missed out on, and then it continues to buy all the way up. So that's basically how, you know, the limits actually work in Forex, in placing your orders: sell limits, buy limits, sell stops, and buy stop. Okay, so let's look at it. So that's where we are, and of course that's how it works on your MT4 desktop. So how to place your stop loss, how to take your place your TP. We already did that. You adjust it to your modify. You know, if you're going to sell, you place your stop loss where? You place your stop loss above where price is, because you are saying that, okay, in case price now begins to go in opposite direction, which is a buy, then take me out of the trade. Okay, and for a sell, TP will be further lower down because you are hoping that the market will sell. All right, do we understand that? Or should I just make that? Let's quickly make that analogy so that everybody is very much on the same page. It's all about making everybody get it right here. Okay, so I'm back here. All right, I said right here, I bought the market here. Okay, I bought the market at this line, and then my TP is above, because when you buy, you're going up. So my take profit should be above. My stop loss should be below. Right now, this market is going to be going against, you know, the price I placed, the order I placed here. If this price gets to this place, it will knock me out, because this is the much I am willing to take as a loss. Remember, the stop loss is the only thing you have control over in this market. All right, so you would say to yourself, this is the much I'm willing to lose on the market. So when price comes here, please take me up. If you don't place this stop loss, if price keeps going further down, you can wipe your entire account. So stop loss protects your money, at least some of your money. It protects some of your money, you know. And of course, those that use proper lot sizing always, you know, have minimal risk and minimal. So the stop loss is the amount of risk you're willing to take in case price goes in the opposite direction. So stop loss, for if you're going for a buy, stop loss will be below, and of course your take profit will be on top, because you're going forward. But if you are selling, let's say you're going to sell from here all the way down, your stop loss will be what? Above the price, some pips above the price, and your take profit will be below, in anticipation that it will indeed what? Sell. I guess we understand that perfectly right now. Okay, so back to what we are talking about today. Okay, yeah, there you go. There you are. All right, so, and of course, partial closing. Partial closing, okay, let me talk about breaking even. Breaking even is adjusting price to my entry, or above or below in case of buying or selling respectively, in order to protect my capital after price has done a reasonable amount of movement. All right, breaking even and trailing stop is very much similar. The only difference between breaking even and trailing stop is that for breaking even, you know, it's just a few profits or my capital protected. For trailing stop, I keep adjusting, you know, the stop to protect more and more profit as I make it. So this is what I mean. Let's go back here so that we get a perfect picture of what we are saying. So, all right, I've entered this right now. Let's say I entered a sell. Don't just assume I entered a sell at the same line. Let's say I entered the sell at this same line. Okay, what I would do in case my stop loss was this line here, assume that this is the stop loss and this is my take profit, and I said I wanted to sell so that when price gets here, I will make profit. The price goes back up here, I will be in loss. What that means is that I would adjust this line, okay, and break even. If price has moved away from where I entered it a reasonable distance, all right, usually most brokers will only allow you to break even when price has done a minimum of 5 to 10 pips, away from where you are. If you do 1 pip, I mean, you're not even allowing the market breathe enough to come back and knock you out of that trade. So, for example, what I'm saying is that I enter the price at this point, hoping to sell to this point. I put my stop loss here. The moment price has moved in my favor of like say 10 or 20 or 30 pips, I just move my stop loss to the same line as the entry point, or I move it below the entry point for a sell and place it somewhere here. The moment I place it below the entry point for a sell, I have protected my capital and I've taken a minute profit. I have protected my capital and taken a minute profit. Now, as price begins to move further and further down in my favor towards my take profit, I keep adjusting and adjusting. That is what we call a trailing stop. I am trailing my stop loss. But remember, the moment I've broken even, it's no longer a loss. It's now I'm trailing the stop. That's why it's not my trailing stop loss. It's not a trailing stop. Meaning, if price comes back in the opposite direction, it will only cut me off where I have trailed my stop onto. Do you understand that? You get it? Okay? So if I was going to buy in the opposite direction, like I'm doing here, and price begins to go all the way up. Remember, price is against me right now, because I bought at this point I didn't buy for any reason. I just bought. Remember, in Forex, to buy for a particular reason. I was only buying just to show you how to place orders. All right, so you buy at this point and you wanted your TP, or you want your TP or take profit to be here, and your stop loss is here. The moment price begins to move in my favor of 10 or 20 pips in my favor, all I'll just do is adjust my stop loss in the direction, okay, all the way towards where I enter the price, or a few pips above it. The moment I do that, I'm able to protect my capital. So breaking even helps you protect your capital or gives you small profit. Trailing stop helps you to protect the profits that you are making as market keeps moving in your favor. Do we understand that? I hope we get it. And then closing out a trade is terminating an order instantly. Like, you know what? I've had enough. I've had enough of maybe losses. In fact, I can't wait for my stop loss anymore. Or I've had enough of the profit I have made, even though it has not gotten to my take profit. I'm okay with what I can see. I like the money that I see, and then you close your trade. So that's exactly how it works for MT4, placing and closing your trades. What about for the mobile? The mobile environment looks just like this. The mobile environment looks just like this. So in the mobile environment, for example, you see the chart here, and then you see all these icons below, and you can see the trading that it also has bar charts. You can customize your mobile charts just the way I customize the desktop. Okay. Now, also you see the currency pairs. The first cursor here, this double direction represents the currency pairs. The next one here represents the chart itself. That's why when it was on the cursor here highlighted, you can see all the currencies: Euro, USD, USD, JPY, GBP, USD. And the moment we moved to this, bar or the candles here, which is the second one here, the moment we moved here, it changed to what? It changed to a trading chart itself. All right, so this is what it definitely looks like. Okay, so how do I place orders on my MT4 on my phone? Very easy. All right, you go to what? The currency pairs, the cursor here. Make sure you're in the cursor here and go to the currency pair. Say you click on, you just tap on or hold down, GBP USD. The moment you hold down GBP USD, you will see a small dialog box like this, asking you the order, new order. All right. If you go to new order, it brings you to this environment. all right? And the environment is similar to what you have on the desktop. You can choose between market execution and other types of orders, different types of orders. So if you click on this arrow here, you can see the little arrow here on the market execution. What happens is that it brings out other kinds of what orders. There's market execution, there's buy limit, sell limit, buy stop, sell stop. Now, this is quite different for those who use the Apple environment in terms of how it calls it, but this is for Windows. Okay, so it has buy limit, sell limits, buy stop, sell stop, market execution. If you're going by market execution, you leave it to market execution, and then you click on sell down here, or you click on buy, and you're very much in the market. That's the way it works. Just like that, that's how you place your trades on MT4. Okay, so if you want to close the order, say you're done trading, you go, apart from where you are, the currency pairs, you go to this icon here, which is the third one, all right, on your phone. The third one signifies your running trades. It signifies the trades that are what? Running. And so when you click on it, it brings you to this environment. You can see that this trade is a negative 63.94. Somebody's going to say, all I'm just showing you is negative trades. What's happening? The one on the MT4 is negative. Well, you need to understand that in Forex, you lose money too as well, all right? The game in Forex is that your win ratio must be more than your loss ratios at the end of the day. Any business that you don't make losses is not the business that you want to enter into. It's a scam. It's a scam. All right. So the balance here is, it shows you how the trade is running. GBP CAD is a negative $25. GBP CAD is a negative $40. You can see my lot sizes here, 0.2. You can see that my lot size here is 0.3. I'm buying. And this one is in profit, even though it's $2.82. And the lot size is very small, 0.01. And I'm selling. Okay, so basically, if I want to close this order, when I come to this third icon here for running trades, I would hold on to the GBP CAD, and then it brings me to this dialog box, and I can either modify the order. The modify the order means I would adjust the stop loss or the take profit. If you come to this third dialog, third image here, the red bar signifies where you can adjust your stop loss. The green signifies where you can adjust your what? Take profit, or put in your take profit. Okay, this is stop loss, take profit, stop loss, take profit. What you see above here in this blue space is what? The price at which you entered. The price at which you entered, because you need to say the price at which you entered to calculate the number of stop loss or take profit you want to go for, depending on the pips you are willing to lose or gain. So if I want to modify this to what it shows me, negative and positive, all right? But if I want to close the order and I close the order here, guess what? Closing the order here will show me this. Close with loss of minus 24.73. Okay, close with this loss. If I click on this close immediately, the execution is over. The order is cancelled, and of course I am out of the trade. But if I want to partial close, remember when we talked about partial close? Partial close is taking part of your profit. That's partial close. We look at it. Partial close is what? Taking part of your profit. I want to take part of my profit. All right, I've made some profit right now. I want to take part of my profit. I would adjust the lot size. All right. Partial close also helps to, manage your losses. All right. I entered this trade at 0.20. You can see. And I'm not liking the fact that I'm losing $25. I'm still far away from my stop loss even. What do? I would come here to close order. Rather than close immediately, I will come all the way up here to where the lot sizes are adjustable, and I will adjust it. This is 0.20. I can adjust it to 0.10, which is half of what I had already envisaged. So rather than have a loss of 24.73, I'll be having a loss of 12 point something. I'll take that loss and manage that loss in anticipation that the trade will still go in my favor, possibly. Or I could take a profit if I was a profit of, say, $24, all right? Let's say this was positive $24 and I was in 0.20. What I'll be doing is what? Taking a partial profit. If I want to take half of this profit, I will just change this to 0.10. Automatically, this will change to what? Close with profit of $12. I will say, yes, I'm happy to take half of that. I close with $12 profit, and then I am fine. So that's actually how, the MT4 environment works. And of course, we looked at the MT4 on the desktop as well. So partial closing is adjusting your lot size of a running trade to protect some profit. The trade must be running for you to be partial closing. All right, partial closing. The adjusting of your lot size of a running trade to protect some profit. That's partial closing. All right, so very quickly, let's look at some technical analysis, okay, for trends and trend lines. All right, I'm sure you must have actually heard the saying, the trend is your friend. The trend is your friend. The rule of thumb is to always trade in the direction of a trend. All right, listen to me, guys. Always trade in the direction of your trend. For example, if I want to trade anywhere on this chart, for example, at this point, the moment an uptrend has been established, I want to continually trade in this trend. All right, at that point. And for here, for the downtrend, you know, and the market has started selling, and I noticed that it's a downtrend, I want to be trading a sell here. I don't want to be buying when the market is trending down, all right? And I don't want to be selling when the market is trending up. Experienced traders trade, you know, counter trends, however, but these are just mini retracements. For example, what do I mean by a counter trend? What do I mean by a counter trend? Look at this downward trend, for example. Market was coming down all the way. It got to this point. Guess what? It did a counter trend a little bit up before now further selling down. That little counter trend, some experienced traders trade this counter trend. This counter trend is known as a pullback or a retracement. All right, a pullback or a retracement is a movement by the market, a brief movement by the market in the opposite direction to that particular trend. All right, so for example, this is an uptrend. I will stay in this trend if I was to buy. I will buy this market if I was on this particular trend. But guess what? When my price got here, for example, it did a little pullback. Some could have said they wanted to sell a little bit of this pullback before continuing to buy. So that's the way it works. There are three types of trends. We have the uptrend, right, with higher lows. What do we mean by higher lows? Higher lows. For example, at this point, this is a low, okay? Market moved all the way up here, okay? And created a higher high, all right? And then came back down. But the low here is higher than the low here. Do we get it? So that's why we say higher lows. Then it went all the way up here to create a higher high. Then it came back down here to create a low. This low here is higher than this low here, and it's higher than this low here. And that's a higher low. And it went all the way up here to create a higher high. And then it came back down to create a higher low. So the higher low here is higher, or the low here is higher than this low, higher than this low, and higher than this low. So that's why we say what? Uptrends create higher highs and higher lows. Higher highs and higher lows. What about a downtrend? A downtrend creates lower highs and lower lows. A downtrend creates lower highs and lower lows. So there is a high here, for example, there's a high here where the market is. Market came down all the way here to create a lower high, okay? And then came back, no, so it could create a low, all right, a lower low. And then it came back up here to create what? A high. But this high here is not as high as the former high. So it's what? A lower high to this particular high. Do we understand it? It's a lower high compared to this particular high. I hope you're seeing the cursor on my screen. It's a lower high compared to this particular high. So that means what? Market is coming down to create another what? Lower low. Okay? There's a low here, it's a lower low. So downtrends create lower lows and lower highs. Uptrends create what? Higher highs and higher lows. Okay, what is the sideways trend? The sideways trend is just ranging. All right, it's just ranging. Market comes to a point, comes back down, comes back up, comes back down, and it's not leaving a particular zone on top or a particular zone below. This is what we mean by a sideways trend. It takes at least two tops or bottoms to draw a valid trend or a trend line. It takes at least what? Two tops or two bottoms. There are two what? Tops here, 1, 2, to create this downtrend. When I want to draw my trend lines, I'll look for 2 tops or 2 bottoms to draw it. When I get a third, that is confirming that trend. All right, that is confirming that trend. Let's look at that in practical terms on a chart, because right now you're familiar with the charts. Let's keep showing you, and let's reduce this particular screen here. Okay, good. So for this particular one here, all right, for this particular one, okay, let's look for something, you know, that could help a lot more. Okay, great. So I'm going to draw my trend line from here. Draw trend line. This is the tool. Draw trend line. This diagonal through here. Draw my trend line from here, and I draw it all the way. And I draw it all the way here. Guess what, guys? What I'm doing here is that price from here touch here. I picked here again. Price touch here. These 2 points confirm to me that there's an upward trend. Remember? Or rather, these 2 points tells me that there is an upward trend. But by the time price came back here to test the trend line again, or came back here to test the trend line again, hello, it's confirmed to me that this is an upward trend. And then I can keep buying. Do we understand? It's not as easy as it looks, so you have to be very careful. Do we understand this? So I drew my trend line using 2 points, 1 and 2. And then automatically, I draw my trend line anticipating that price will come back to touch it. When price came back to touch it here, the third time, that's a confirmation. There is a what? An upward trend. And then I keep buying all the way up. So the same thing happens for downward trend. The same thing happens for a downward trend. Let's look for a downward trend here. Okay, I can find one here. Okay, so this is my trend line. I draw it all the way from here, 1, 2, and 3. Okay, bam, all the way. Good. So price came here, created this high. All right, came back down to create a low, came back up to touch it here. But this high here is not as high as here, so it's a lower high. Okay, that's telling me that these are 2 points. The moment price came down here, I came back up to test it somewhere here. It created what? A lower high again. The high here is lower than this one, is lower than this one. The 3 points confirms that is a downtrend. The 2 points helps me to draw my trend line. Do we understand it? It's just that simple for a buy and for a sell. Okay, so very quickly, for time's sake, let's move as fast as we can. Okay, and so in Forex, we have levels and we have zones. We have levels and we have zones. There are recognizable levels of reversals and zones when trading currencies in Forex. However, these levels are relative and not necessarily cast in stone, because when these levels serve as resistance support sometimes, that people know. Resistance means price cannot go further than that. Support means price is bouncing off a particular zone or a level. That's what we call support and resistance in Forex. So you must have heard some Forex traders mention support and resistance. Now they can also be broken. This support and resistance can also be broken, and that's why I am not really so much of a fan of support and resistance in trading. But I would rather pay attention to zones. Okay, note them as zones and levels, but not necessarily cast them in stone as support or resistance. Okay, so that's the way it works. So when plotting support and resistance, there are many things that you need to look at, for support and resistance. You need to consider the different zones or the points above or the different points below. The different points above and different points below for support and resistance. Okay, so basically, everything that you need to do is to create levels or create zones for trading, and then that works for you. When we actually look at when we get into the next session of the class, we will look at how to look at these zones and of course these levels, the zones and the levels on the chart. But basically, you always need to know that in Forex we trade zones and we trade levels. A big thank you for being a part of this class. We do appreciate every time spent. And remember that Fortune Signature is all about building a fortune trading Forex. Thank you very much. And of course, have yourselves a wonderful day.